Hey, Allison here, and in today's options video, I am going to talk about AMD. Now, the reason why I have AMD up is because it has been in an overall bearish trend this year after it broke the 100 period simple, and it's struggled quite a bit on trying to maintain any sort of retracement back up, let alone breaking above that level and trying to hold it as support. The one time that we really tried to break above that level this year, I would argue, was back here. And you can see, even though we did get a nice break, we immediately started to stall. We had trouble breaking and holding above the $100 price level. And ultimately, we ended giving it back up and then rolling down into new lows for the year. So, currently, after the earnings announcement, we have found AMD working its way back up. Now, this isn't too surprising because we were very close to bearish exhaustion levels, so we knew momentum needed to get some sort of reset. And we, of course, had a nice trend lower after the last test of the 100 period simple. And so now we find ourselves right back in that spot. The difference, however, compared to us currently trading here versus back here in August, is in August, we had a lot of strength to be able to get us to break above this level. We had rising momentum helping us out. We are holding the 10 period simple as support. And when we broke above that range, we immediately broke it. We held it into the close and it held as support the next several days as we kept trying to get above 100 and ultimately failing. This time, however, we're not even getting really a break and hold above the 100. We've attempted to break above the 100 twice, but both for the open and closes of these bars, it's maintained holding resistance. Today, at least as of right now currently, we're also breaking below the 10 period simple, meaning what used to be support is now also turning into resistance here. Even though the momentum bars are overall above the zero line, which does add a little bit more bullish support, we're already starting to see them try and pull back, especially today. Versus when we broke the 100 here, it was on green bars and strength moving higher. So we're already getting some weakness here. We're already getting a red bar to more than likely print today. And we also have a pullback signal. So if this pullback signal and the compound breakout tool is valid as we break the 10, all of that is a clue that we might drop further. There is a price level here around 70 that could be the first target to the downside. And certainly if we break the 70 price level, the bigger target I would have is down here around 65, where the 30 period simple and the ATR trailing stop are printing on the daily chart. And of course, from around $73, right, that's a pretty healthy move to the downside that could happen. Let's pull up the weekly chart. The weekly chart is also giving us a clue that we could in fact move lower, at least to that $70 price level I mentioned. Now, we recognized it as a price level of support at this point because we're trading above that level on the daily chart. But $70.16 is also where this bearish divergent bar's low is. For those of you who are unfamiliar with this indicator, a divergent bar can help identify when you might see a higher high or lower low. And I typically give it 3 bars. A lot of times you get that immediate follow through, but 3 bars is usually the sweet spot for if the signal is going to work out or not by that point. And so as you can see, we have not yet broken below 70.16. We're on our second bar currently, so the second week to try and follow through with that. And if I like to give it 3 bars for it to work out, that means I need to give it up into next week to try and follow through with that signal down to potentially 70, if not rolling off of the 100. So with that in mind, I like the idea, 2 different ways of going about this trade. The first one would be a bit more of a bearish signal where we look to play more the theta decay, right? Where if we don't get so much the directional move, maybe we can benefit just from it holding above, below the 100 period simple as a resistance level and benefit from the potential chop. And that trade idea You could look at it this week, you could go out to next week, but it would be something either, of course, you could do a pure call credit spread, or you could do something like this, where it is a um, basically an unbalanced butterfly. So the way you set this up is you have a standard butterfly, but then you have an extra contract on the credit spread. So one extra on the short strike, one extra on the long 77.50. And so that creates an unbalanced butterfly where the additional contracts on the credit spread. And the idea behind this trade is that it opens for a net credit. So you can see here on a very small width of 50 cents, you're getting about 12 cents credit. So the idea is as long as this remains out of the money like it is now, the 12 cents decays away, you let it expire worthless, and it's a locked in profit. If we end up bouncing up and stalling at the 100 period simple, which is at 77.23, so notice the short strike at 77. So if we bounce up and stall in that range, then you have a max profit potential in the case of this spread width of 60 cents. That's the credit plus the spread width of 50. So 10 plus 50 currently is 60, and that's a max profit of 60 cents. If it goes completely in the money, then that's where your risk starts to come in, right? When it starts to break above your short strike, and in this case, it's a 40-cent risk. So you can see this is a very small risk versus reward. Obviously, if you have a larger account, you can build this up contract amount. So for example, on a 10-lot trade, you would have $130 of credit based off the 13 premium. And of course, this is jumping around a bit. So let's just call it 13. So $130 of credit. If you got the pin, that translates to a 630 profit potential. And if it does start to go into the money, you have to be okay with a risk of 370. So you can build the contract amount up to match whatever your risk versus reward is that you're looking for. You could also consider going with a slightly wider spread. The benefit to this is it does add a bit more premium. The con, though, is it adds a lot more risk. So personally, when I'm able to, I like to keep my spread width a bit more narrow and just build up the contract amount for that risk versus reward to look a bit better. And in this case, for this trade in particular, I would say ideally 10 cents on a 50-cent width spread or higher would be a good fill for this. So that's the first way to trade it, right? It benefits more from chop. It gives you a little bit of a forgiveness factor if it does start to bounce higher, as long as it doesn't break the 100. And of course, if it rolls over, it's going to expire worthless and just fine. You get the premium and theta decay to benefit you. If you want to play this a bit more directionally, however, with the idea that we do get down to or below 70 within the next 2 weeks, then you might consider doing a long put. And in this case, you might do something like the 71 put out 2 weeks from now. Right now, that's about a $1.67 cost basis. If it's within your risk tolerance, you might actually consider the 72 strike at 205. The reason why for the 72 strike, I kind of like that a bit more, even though it costs more, is we're basically looking for within the next 2 weeks by next Friday for the price to get at or below 70.16 based off the weekly bearish divergent bar. So if it took all the way until next Friday for that to follow through to 70.16, we know the 72 strike would be basically $2 in the money. And so it'd be right around break even, right? That would be the ideal situation. Now, if AMD starts to really bounce up from here, you still have to be okay with that $2 of risk. So please keep that in mind. Don't go outside your risk tolerance. If you want to keep the risk still a bit more narrow, you're like, Allison, I like the trade idea. $2 is just a little rich for me. You could consider a spread, right? The 72.70 is 72 cents, $1.28 profit potential, still not a bad risk versus reward, and your short strike's right in line with that $70 target. If you think we have the possibility of getting down to 65 to test both daily and weekly moving averages as support, then you might consider going with a slightly wider spread, maybe a 5-point spread. That's a $1.41 risk, $3.59 profit potential. Once again, not a bad risk versus reward scenario, and gives you a bit of time to try and play the move lower. Um, so those are the, a couple different ways you could consider trading this to the downside depending on your risk. And you kind of have the first two targets that I would be eyeing. Now, keep in mind there is some economic news that comes out this week. Powell's also talking. He can always move the market. So keep in mind that so far, I like how this looks. Any sort of break strongly above the 100 where we turn that into support cancels out this trade idea, and that's a time where you should probably look to protect capital or, weigh out if you really think it's just a minor break and an immediate drop back down, right? Then you can kind of determine that for yourself. But just for those of you who really like to stick to principles, I would not want to see a close above the 100 where that's trying to hold support. And as long as it's looking like this, I think there's a good chance to go down and test 70, if not 65, this week, potentially into next week. So that's what I'd be looking for there. And certainly if that economic news and stuff that comes out later this week has a negative market reaction to it, that's only going to help, I think, AMD roll back down into that range. If not, maybe potentially into the trend itself back to the downside. So that is my time today, guys. Thank you so much for joining me. I hope y'all have a great rest of your trading day and week. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time.